Hey guys, welcome back. Now, Ray Dalio is one of the world's greatest investors. With a net worth of around $20 billion, he's clearly learned a thing or two about investing money. He's most well known for creating the world's largest hedge fund, Bridgewater Associates, and they look after over $140 billion of other people's money. Now, along with every other US investment company that has over $100 million in assets, they must disclose to the SEC what they've been buying and selling. And this is great for us smaller investors as we get to see how the billionaires are investing in the stock market. So, in this video, we'll be looking at Ray Dalio's hedge fund portfolio, what they have been buying and selling and putting money into and pulling money out of. And then we'll finish with all the key takeaways from all these recent changes. As always, if you do find anything useful in the video, be sure to drop a like. Always very much appreciated. Okay, want to see how Ray Dalio and the team of the most successful hedge fund in the world are investing in the stock market right now? Let's take a look. So here it is, guys, the portfolio of the most successful hedge fund in the world, Bridgewater Associates. And this has a valuation of $11.3 billion and it's made up of 455 positions. So the first thing to point out is that this is an incredibly large portfolio. And to be honest, I'm not entirely sure why they decide to keep hundreds of these micro positions. When we compare it to some other very successful investors, we have Warren Buffett and Berkshire Hathaway, and this portfolio is $270 billion, but still the vast majority of it is only made up of about 10 stocks. And I recently did the Bill and Melinda Gates Foundation as well, and similar to Buffett, this is double the size of Bridgewater, yet still the vast majority of the portfolio is only about 10 stocks. But for some reason, Bridgewater likes to keep 455 different stock positions. So obviously we don't have time to cover everything, so I'll focus more of the time on these top major positions and we'll group together all the micro positions. And this is what it would look like Q1 2021. Here are the top 20 stocks, and the largest position, 11%, is in the Spider S&P 500, ticker SPY. Next largest is Emerging Markets ETF. Then we have some individual positions, and their single largest, biggest stock position is Walmart, followed by P&G, Alibaba Group, Coke, Johnson & Johnson. We then have the Spider Gold ETF, GLD, and this gold ETF used to be the second largest position, so they've done a huge reduction on gold, which we'll cover in a second. We have Pepsi, another emerging market ETF, McDonald's, Costco, a China large cap ETF, the second S&P 500 ETF, Starbucks, Pinduoduo, another China ETF, another gold ETF, a corporate bonds ETF, and Estee Lauder, and then the remaining 435 positions make up the rest of the portfolio. Find the most believable people possible who disagree with you and try to understand their reasoning. So these were all the buys, the sells, what they increased and what they reduced. There were 127 new buys, 197 companies they completely sold out of, 204 companies that they put money into, and 123 companies they pulled money out of. So obviously we don't have time to cover all these in just a 10-minute video, so what I'll do is this. The 80-20 rule states that you get 80% of the value out of something from 20% of the information or effort. So essentially I'll focus on the few stocks where they put most of their money. Starting with the reductions. The biggest thing they pulled money out of was SPY, which is their S&P 500 ETF, a 14% reduction. Their second position, which is their Emerging Markets ETF, again a 15% reduction, 12% reduction from Alibaba Group. But one of the biggest things they did in this quarter was the huge reductions in gold. And Ray Dalio historically has always been a big fan of gold. But GLD and also IAU Q2, they reduced it by over 40%, which is huge. Next up, what have they been putting money into? And it's individual stock positions. So these are the stocks that Bridgewater Associates are most bullish on. And their number one favorite is Walmart. They now have nearly $500 million into Walmart. Then P&G, Procter & Gamble, we have Coke, Johnson & Johnson, and Pepsi. And what were the biggest new buys that they did? And the biggest purchase was Lowe's, which is an American retail company specializing in home improvement. And this was a Q1 purchase, so it was somewhere between January and March. And obviously this has been a good buy as the stock is currently up about 20% from Q1. So clearly a very good buy for Bridgewater. Next was the Home Depot. And this is the largest home improvement retailer in the United States. And again, they bought in Q1, so their position is probably up around about, again, 20%, which is excellent. And you can see they've jumped on the trend of home improvements. House prices have been soaring. Everybody's beginning to do home improvements. So they've picked a couple of good winners with Lowe and Home Depot. Next up was Johnson Controls, and this is a multinational conglomerate, and it seems they've got another winner. So the stock is probably up around about the 26% range. So that's 3 for 3. Number 4 was Lululemon, and this is an athletic apparel retailer headquartered in Vancouver. But this time, year to date, they're probably down around about the 5% mark. And finally, interestingly, they have bought into Tesla. And I think everybody's well aware of who Tesla are and what they do. And we know the stock price has been falling, so it's still currently down about 20% from Q1. So their initial purchase for Tesla is going to be down, but clearly Tesla has a very bright future. And we'll finish with one final Ray Dalio principle: allow time for rest and renovation. If you just keep doing, you'll burn out and grind to a halt. Build downtime into your schedule just as you would make time for all the other stuff that needs to get done. So the key insights from the Q1 updates for me were, number 1, this 40% reduction in gold. Ray Dalio is very well known for being a bit of a gold bug, and for the last couple of quarters they've been making big reductions in their gold position. Number 2, $25 million into Tesla. I guess since Tesla stock has been coming down this year, it's now falling into a range which they have found appealing. And this is great for all the Tesla fans out there. Number 3, reducing their exposure to the big ETFs. Having followed this portfolio for a while now, diversification across big ETFs was a major theme, but this trend is now changing into individual stock positions. And number 4, increasing their individual positions. And the 3 stocks that they are most bullish on are Walmart, P&G, and Coke. And I'm not 100% sure why they choose to keep all of these hundreds of micro positions, especially when you have people like Warren Buffett and Bill Gates, who their portfolio are much larger in size, but they choose to keep much fewer stocks. So those were the highlights, and as mentioned, for all the people that want to dig into every single position, I'll include the spreadsheet below which has the entire portfolio in it. For now, hope you found this useful, and let me know what your biggest takeaways were. Just to say then, if you did find anything useful in the video, drop a like, and a big thank you to everyone who does. If you haven't yet subscribed to the channel, then I invite you to click below and join us. I do have some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.